Hope you guys are doing well. Posted a very quick short bias for today. We do have short-term SMT with the PM session high up here between ES and NASDAQ going into 9:30. So expecting a drop into discount right at 9:30 going to 10 o'clock. I'm also going to be watching how we react to London session, but if you look at the hourly chart here, we are kind of hovering around 50% of this dealing range here. So you can always expect consolidation around 50% of the dealing range, typically after a large expansion like this. So if we go into the hourly chart, it's a little bit harder to tell just for the fact, if you look at the 15, given the current daily profile of basically the same exact thing we saw yesterday, expansion up, going into London session, no protraction present until New York. We're expecting a drop into discount, and then how we react to discount and potentially the London low could give us the rest of the morning profile. So we could see a full continuation all the way down, or we could see a drop into discount first and then a repeated retracement back up to previous day high, for example. The next ERL after this hourly gap would be back up to previous day high. So obviously if we form SMT at the London lows, then I'd be looking at potential reversal. But for now, looking for this drop into discount. I'm going to mark out that higher time frame dealing range really quickly. But midi drop right at 9:30. A lot of low resistance in here. They're basically all from the New York session. Let me turn on the Asian session lows. What is on? Oh yeah. So for the most part, we're holding this gap. We didn't get that quick expansion out of it though. So watch I refer to this order block, this for value gap as well. But yeah, go back to the hourly chart really quickly. Weekly profile, if you look at Monday to Friday, like this would be high of week, low of week. Very weird weekly profile, just a consolidation profile for the most part. There's been no expansion outside of the range. This order block here is going to be important. We do have technically it's a high probability order block. We've got this inefficiency here. If you look at ES, that could be the reason why we have this SMT. Watch how we hold this here. But I would be bearish going into first 30 minutes or so opening range. If we got that SMT and we start to close above this range here, then you look for the previous day high up here. And then once we close through this swing low, we should not touch this order block again. Traded up into the 5-minute sibi as well. Tiny breaker in there. You could use it for projections if you wanted to. It's quite a far dealing range to project though. Lines up with London low for the most part. So order blocks here, highest quality order blocks, like reclaimed order blocks. The only times you want to see them used is when something like this happens, where if you're trading through the order block, if we have an order block here, we can reference that order block again. As long as we don't take out this swing low with displacement, we can repeatedly tag the order block. Okay, it doesn't matter how many times we tag it. Once we displace through this low, the order block up here should not be touched again. So if we were to come back up and retrace and tag this again, to me that it's evident that we may want to deeply retrace into an efficiency or something in premium, or we may outright be reversing, and that would be the change of the state delivery. Okay, so we did have this retracement leg up, touch the order block, come back down. We took out that short-term low. It wasn't speed, wasn't a lot of displacement in it. But now we're not going to just touch this. We're most likely going to retrace a little bit further into premium, maybe into OTE of this dealing range. Oops. And you can see how we react as a result. But fair value gaps aren't really used that same way. Fair value gaps you can see used and touched multiple times on different occasions. And just because we displace through a low, for example, and then come back up and touch it doesn't mean, we're going to completely break order flow. It's either going to be stalling out, building consolidation, or it's just touching it one more time for given opportunity to enter. So we're within OTE now. But notice how we're displacing inside this gap. The reason that you may not expect a near continuation profile this morning, just simply because no meaningful protraction underneath the midnight opening. I'm not saying it's impossible, but New York continuation needs to see London protract at some point. So the profile technically wouldn't be New York continuation. Although since we have the SMT now building at ES, it's possible that we do see the it start to reverse, delete some of this stuff. And the fact that we're closing through this sibi, right? NASDAQ is now the stronger one. I'm going to screenshot this really quickly. So waiting for 5-minute SISD and macro time. So you can see here, didn't drop into discount, failed to drop into discount. ES drops way into discount. Look at the hourly chart touching this order block with the inefficiency. So we have imbalance SMT, so PDRA SMT, as well as the London low SMT with here. Like over here to this chart, you'll see a little better. So clear SMT here. Right, important. And then since this is technically a ERL SMT, you'd be looking for IRL, but given the fact that there's really not anything in here that's untouched, like right, this inefficiency was already claimed, I'm going to be looking for previous day high as the next target for ES, for NASDAQ rather. If you're on the market review yesterday, I was talking about how I like to look for specific things, the 5-minute for order flow. This is an example where this 5 minutes imbalance, if we were to trade through that, that's basically a change in state delivery for me. Like I wouldn't need to see anything else. So if this inefficiency now that's holding, order flow is starting to be bullish, right? Short-term swing high, broken with displacement, drop into an inefficiency, uses it. There's no order block on this though, so we could return back into this one here. And now we're just waiting for time of day. So I'm looking for macro time. Probably drop into discount. But you got 5-minute inefficiency here. Oops. Version. So you know the profile. We got no news today, so we're looking for open, low, high, close, standard dynamics, and then timed 9:30. 10. This is what I assume is playing out right now. and then 10:30 to 11, and then we have SMT here. Right? If you look at the schematics profile, this is like the same exact thing you always look for. And then somewhere in here, we're looking for that entry. Now this would be a breaker. So look how we react to the upper portion of this. We don't need to drop in a discount technically during macro time. But as we close through this swing high, I'm going to be using fib projections. 4 lines up pretty far with it. We do technically have this AM session high, which is an ERL, but I wouldn't be too concerned with that. And we didn't get the closure through the order block yet. Got the swing high, stop run. But got to be careful to see if this is a stop run or just a clean continuation through. Now it is a Friday with no news. So typically these can be a little bit more difficult, just like how Monday is the start of the session, PM session, sorry, Friday is end of the weekly range. We can consolidate. The reason you wouldn't expect consolidation on a day like today is the weekly profiles were still within the range. Normally Friday's going to continue it off. Wednesday reversal, I would expect Friday continuation. This is just a deep retracement into this bullish order block here. Didn't even touch it, but the inefficiency here, holding bullish PD arrays, breaking through bearish ones. Like another reason why you look to be bullish, and all these smooth highs appear. So even going to next week, the buy side liquidity appears a little bit too smooth. Low resistance up there. So we're dropping back into the order block here. Technically, you would use the wick. So this entire portion is the order block, right? That's the entire part. The most reactive part is going to be from wick to open. I normally use the open, which you'll see on the streams, right? The last portion you want to see touched is mean threshold. So if we're touching or really closing below mean threshold of the order block, that to me indicates that we're weak, or there's another PD array that it should be reaching for. But typically, if it's a high probability order block like this, we have a large inefficiency. We just came from a stop run. Mean threshold of this should not be touched. So like there, now we're touching mean threshold. We're closing, basically. We're wicking all the way down to the bottom end. Not what you want to see for a bullish order block. So you look at the 5-minute, we never got the closure above this short-term stop run. Now you gotta look at this SMT at the highs. I mean, really tiny SMT, and we have the SMT at this. So we got SMT on both. It's decoupled. This is why decoupled markets are a little bit more difficult to trade. So if you mark this back as the 5-minute sibi, let's see, we're already. So this is why, like, if you have a high probability order block, you don't need to see a full closure even past mean threshold. If it's wicking like this, if it's trading even past mean threshold, down to the bottom portion, you got to be somewhat aware of that. So now we have short-term SMT here, and with PM session. Here's macro time as well. You know, something like this is not the cleanest. So opting out to just sit and watch and wait. Nothing wrong with that. No bullish break, bearish breaker in here either. So dealing range, short-term dealing range. Could have went down for the volume balance. That's true. Such a deep retracement. Let's see what ES is doing. I mean, we're still stuck in this range. No clue. There's SMT at the highs and lows. You know, nothing in this that screams high probability. And in terms of the 5-minute, we'll pull it up over here. Still touch this order block. We have the stop run, but the look at the candle body is telling the story. We have the closure within here. I mean, I would still say that's a evident of a breaker. I want to see how the macro plays out. So the macro is obviously 20 minutes long. You have to enter as soon as it starts. It's just there should be a high quality entry within this macro time towards draw. Yeah, made a good point. There is a volume balance down here, which, to be honest, shouldn't be touched in this range. It's such a weak PD array. Volume balances are the weakest PD array. So typically, you know, closure through them, wicking through them, it doesn't mean anything. So don't use volume balances as like a, oh, if it trades through this, then we cannot flip bias. It's not true. It can be touched multiple times. It can be closed. Though if volume balances are respected, as inefficiencies are, so like you see a wick into it, typically that screams, especially if there's a really clear higher time frame bias. If a volume balances is just wicked into and then it trades away with speed, that's like really telltale sign typically of strong order flow, low resistance liquidity. The really only reason you would use a volume balance, or the reason I use volume balances most, is when there's a volume balance present within a fair value gap or a order block. So something like this, right? This inefficiency would not be from here to here. It would be from all the way to here because there's a tiny VI there to extend it out. TES has had no change in state delivery either. Excuse me. And YM is selling off. What's DXY doing? It's hard to tell in here too, but short term looks like DXY want to retrace into the order block. Still bullish order flow. This is a retracement leg. So that means indices should move lower if it's coupled. So short-term retracement into a premium market there during macro time. Also a touch of the order block. But see how we're kind of within this range? There's SMT everywhere. Higher time frame pointing to two different things. Right, there's SMT at the PM session high. There's SMT at the London session low. It's not a clean market. So this is what it looks like to be, you know, kind of 50-50 on bias and within the macro time. So that's why you don't want to force, just because it's macro time doesn't mean you force anything. Just because it's the time of the entry, If there's nothing clean, then there's nothing clean. That doesn't mean as we displace and as things become more prevalent, then you can take something. Like obviously, if we were to close through the swing high, then I would expect this is the new time low. We're going to continue into 1030. But how we react to these PDAs, there's so many we're bouncing between. Like this retracement down here indicates weakness because we're closing through this order block, almost through the order block. And obviously the order flow is stronger since we're closing all the way up in the bullish end of this. No drop into a discount besides this volume imbalance. Right, so it's like it's the scale. It's a lawyer argument. Which one has the better case? Well, given the order flow, well, we traded up all the way to the premium end of this 5-minute inefficiency, but then we dropped all the way down into a volume imbalance and discount. It should just be reaching into this gap in the order block and then trading back up. So it's like, okay, we're weak. Now we're trading back up. Are we going to close through this? What does that say? And the easiest part is when, it's strong. And this is the stronger asset, right, compared to ES. So we should be moving decently stronger. I mean, if you look at ES, it's still kind of lethargic, and these larger ranges, higher liquidity, high resistance liquidity. But we're just consolidating here. The 5-minute obviously is not really helping too much. So we are holding this inefficiency. We tapped up into the bearish order block here. And we have the short-term SMT at the highs. I want to see secondary displacement in either direction. So that's going to be more important because I can frame both sides right now. I'd favor if we displace now to the downside. If we had the sibi that formed and we trade back into that, that would, for me, for the most part, frame the whole narrative, inefficiency, etc. But we're kind of just hovering right around 50%. This would not be, yeah, this would not be an intermediate term low. So displacement through that, we're going to reach for a London low. But short-term low, low, short-term low. This rebalance in efficiency. But there's no bisi in here, which is the annoying part. If there was a bisi in here, we dropped into it. That'd have been nice long, especially since we're touching the order block. If we were to touch this order block here, we're just staring at nothing. So in consolidations, the tip I would say for new people is get off the 1 minute. So what I would do normally in the beginning was if we were consolidating in something like this where we're just flipping back and forth and there's not really any clear directional bias, go to the 3 minute or go to the 5 minute. Okay, and once we see displacement out of that, then you can drop back to the 1. But sticking on the 1 minute, there's so much information. If you don't know what to siphon out, it's going to be more difficult than it normally is, right? So if you zoom out to the 3 minute, okay, well now it's a bit more clear. You have this inefficiency. We got the order block there. We touched after the SISD. So it makes more sense for us to trade, at least on the 3 minute and the 5 minute premise, that we're more bullish, right? So you go back to the 1 minute, and now it's 10 o'clock here. So you'd expect our new time low, or our new timed high, but you put in, we're trading through this inefficiency. So for example, a demo long, stop underneath the order block. I'll put on 2 there, actually. This will be just the 1 for the week. Obviously not a This is just demo. I'm showcasing. We'll try and look at stop management and how to treat that, and how to, you know, take partials as things move on. So fair projection down here. Target up to -2, -2.5. Is there a 15-minute PDA that lines up with that? We got this up here. Imbalance. So TP on here. So I'm looking at, we're obviously aiming for time of day. So time of day is going to be important there. Aiming for 10:30 to 11 o'clock. Now, PD arrays in line with this fib projection here, -2, -2.5. And then previous day high is an important ERL that we should be targeting. So I'm looking for reasons why we should be expanding into this range. And I mentioned yesterday on the stream recap, if we're going to target the -2, -2.5, there needs to be some sort of a 15-minute or 60-minute PD array that lines up with it. So if we just use this chart, 15-minute, we have this 15-minute imbalance, right? But it's such a large imbalance. Is there anything we can use to refine down this range? Well, we have this inversion fair value gap that lines up with this sibi, right? So this would be a range you could be targeting. It's more precise, right? Because in here, there's not really much between this swing high and here. Obviously, there's nothing wrong with this swing high. You could be using this as a target too. And you know what? I may actually use that depending on how we react to that short-term buy side. But this should be cleared. I want to see it traded through and cleared preferably. And then we target up to here because notice how this is below the -2. So a limit order on here. Actually, we'll treat that buy side as well. So short-term buy side. Let me change this to ticks so we don't get distracted. So if you look at the 30-minute, it's a little bit more clear, right? We dropped into it. We have SysD here on the 3. We have this inefficiency, this bisi, larger 3-minute gap. We have the SMT at the lows with ES, intermediate term low here. Short-term low should be held. We got a stop run there. I want to see expansion now. So preferably we see expansion forming bisis, right? We want to see bisis within that range. The reason we may be chopping around here is because we have this inefficiency we have to trade through, filled with both buying and selling. But then I want to see speed through this high up to this short-term high and then managing as we go through. Put the execution labels on. Actually, I'll keep it off, but you can see just long really on this. This would be treated as inversion. You can see it there. Tiny low probability order blocks within here. So there's nothing really clean between here and here. So between this range and this range, it's very wick, very wicky. There's not a lot of clean order blocks, clean displacement legs. So trading within this range is hard because there's not clean displacement, and displacement will tell you direction and speed, right? Ticks. Yeah, bad PA, exactly. So I'm gonna try and show you how to manage something like this emotional wise and then stop in a good position like we did last week. Was it last week we did one of these? I'll try and do one per week. And since we didn't do it yesterday, I'll try and do it today. So stop placement is going underneath the order block. So you could, you know, if you were really aggressive, if there was a bisi here, typically the 3 candle rule. So if you're shorting a sibi, long a bisi, the 3 candle rule. So if this is the bisi you're looking at, that would be the stop placement, right? Typically that works, especially if the order block is within that range. So see how the order block here is within the range of this bisi. So if you were going long on this candle, for example, stop would go there. Since there isn't any really short-term low that I'm looking in this, there's an intermediate term low. You could place your stop there. There's nothing wrong with that. But if we're going to take out the order block, this order block, right? I'm looking at that's going to be ran through, then that's going to be ran through, and then we're going to touch this bisi, then we're going to touch, you know. So order blocks typically, if it's a high probability one, that's what you want to be using, because those are the ones that are going to be respected the most. Fair value gaps you can use, like breakaway gaps, for example. If you know exactly what you're looking for, breakaway gaps are really, really strong because you can tighten that stop loss up. It's harder in the beginning for sure, but I would say short-term highs and lows is going to be the easiest, then order blocks, and then fair value gaps, and then obviously like really, really tight entries and tight stops. But what would this short-term high be, right? This would be high resistance. Why? Because we just took out stops here. So if we took out stops here and there's no buy side up here, it's going to be high resistance to get up there, right? Rather, this would be low resistance, but since we have the SMT and we have a bullish bias, that would be, why it's kind of slow grinding up. This is typically this kind of price action, and here's what you see when we're trading through a sibi. So if we're bearish and there was a huge, sibi in here, right, and we're trying to trade through that, that's what the kind of price action you want to see. But typically we'll notice how this is the high resistance order flow I was talking about yesterday too, with the order block, the last order block touched. Starting to see expansion. I want to see this short-term high ran through aggressively and then speed after that, right? Because if this, think about it logically, where are the stops and where are the imbalances? So if this just ran stops here, is he going to slowly run this and then come back down? Preferably, it's going to go for the next logical place where there's going to be stops. This bias of liquidity is the next logical place. So it needs to quickly run this and then preferably close above it and then speed and aggression through. We can obviously retrace into a short-term fair value gap, but I want to see it run aggressively through here. So we got that short-term high. Now, the reason it could not is because we have this larger inefficiency we're trading into here. And this is a wick, and wicks are inefficient too. So in hindsight, maybe not, we won't see speed, but preferably, that's what I would want. Now, notice how I'm not scrambling to trim my stop, or I'm not scrambling to move the limit orders just because we took out that short-term high. That would be a nice partial opportunity, right? At a minimum, if you're going long, within this gap, short-term high, partial opportunity, easy. But since it's demo, I don't care about this stop loss, but you should be using a risk amount that's in demo, that's in line with what your tolerance is. So if your tolerance states, as soon as you enter a trade and you see yourself jamming your stop quickly to break even or quickly up to, the closest swing point, and you're not trading a turtle soup. If you're trading a turtle soup, that's reasonable. But if you're trading normally and as soon as you see profit on this, boom, you're jamming it up to break even. Your position size is too high. Simple, plain and simple. And it's not like a shot against you. It's just a problem that has to be fixed. And you should love these kind of problems, because as a trader, you have to fall in love with problems, because problems point to an underlying issue. And as long as you fix enough issues, you'll be profitable. That's it. All right. So it's this constant battle of finding problems, solving them, and improving. Like, think about it. So think about it as like total problems fixed. The best traders have, so if we take out this short-term high, I'm going to trim stop to here. Okay. Just trimming it. I'm not jamming it to break even. I'm not taking partials off. We're just trimming it. All right. So that's an intermediate term low. Short-term low to the left of it. Short-term low to the right of it. We've also completed this market maker buy model. We've completed this market maker buy model. We've completed this short-term market maker buy model. This right here is a immediate rebalance. So notice how we opened up here and there was a gap, right? As soon as we took out this high, it opened up to here and there was an inefficiency between here and the open. But then we came down, we touched the order block. This is an immediate rebalance. Typically, it's one of the strongest PDRA signatures you can find. So I'm going to screenshot this. I'll put it in predictions chat. But going back on what I was saying, the best traders, right? The ones who are profitable, the ones who make X amount of money, whatever you want to make, right? Think about that number in your head of how much preferably you would want to make per month. and then get rid of it. You know, thinking about that money is not going to do anything. So have the goal and obviously shoot for something, but don't think about that goal as you reach for it. You got to be process focused and goal oriented. So always think about the process. The process is solving problems. Just like a business owner, right? A business owner, if their overhead is too high, how can we cut back on overhead? Just like this. So you figure out, okay, what are the problems that I need to fix? What are the things that I kind of suck at? Do I suck at managing stop? Do I suck at finding high probability setups? Do I suck at um, trading on the days I need to trade on? And notice I didn't say over leveraging and over trading, because over leveraging and over trading is that points to an underlying problem. Okay. So just because you're breaking your rules, it means that you either don't have faith in the model or there's something else that's underlying that's stinging, right? Um it's not just that, if that makes sense. So think about it. Okay, so if, say, I'm trying to think of a good trader. Kane. You know Kane, I think. If you've been on Twitter, you know who Kane is. He has probably, I don't know, at least 3 years of trading, I would assume. But think about how many problems of his own he's solved, right? He's maybe solved 1,000 different problems that he's had psychologically. You know, individual different problems, tiny, minute details. The people who are just starting off, they've solved 0 psychological problems. And there's obviously going to be some people who start off and they just have 2 problems they have to solve, and that's why they can learn quicker. And there's other people who have to solve 1,000 because they either things from their childhood or, you know, a bunch of different things that it could incorporate into why they're more emotional or why they can't control, you know, have self-discipline. And everyone can do it. That's the thing. It's just how many problems you have to solve. So figuring out, taking stop losses, okay. Technical issues are not a big deal. Technical issues can always be figured out easily, right? Like if you take a loss technically, okay, maybe my stop was in a good position or there was this, right? It's really easy to go back in hindsight and be like, okay, there was clearly this order block or there was clearly this fair value gap that I missed. And, in hindsight, I can do that. And that's what journaling and screenshotting after the fact is there for, is refining down your craft. Psychologically, it's a lot more difficult, right? Because you have to kind of dig deep as to why you think something. And it requires a lot of reflection and brainstorming as to, okay, why is this the issue? Notice we have the lack of a wick here. So we're putting a wick on it. That's like what the devil's mark. I don't like that term, but anyways. So I want to see ES starting to trade up now. This is a little sketch. I don't like the fact we just took out this short-term high here. Oops. We turtle souped it perfectly. Look at the candle bodies closing there. And then now we're displacing down with speed. This is not what I want to see. So maybe we'll get to see a loss today. But stop's in a good position. And your stop should always be in an area where the trade is invalidated, right? So you don't want to be jamming the stop just because it's 20 points or just because it's $400 away or because it looks good in this spot. Somewhere that invalidates the trade. And on the 5-minute, it also makes sense because if you look at the 5-minute here, we have a 5-minute order block, low quality, but this is below mean threshold of it. And then on the 1-minute chart, there's a lot of stuff here. I apologize. But it also, I think logically it makes sense there too, right? And we're relying on time of day. So if at 10:30 we sweep this high, and that's all we can get, I'll close out this first one and then trim stop to break even. See if you can run all the way up to previous day high. If we can't, it's all good. Does an immediate rebalance require hitting PD rate or just overlapping wicks and candles? It's a good question. From my understanding, it's just the overlap, like the immediate overlap, right, where it's filling it out. I don't know if it has to hit a PD array. For this example, it does touch the order block. So I don't know if that's considered an immediate rebalance. That's a good question. I don't know the answer to that. You could probably find it on YouTube though. When ICT actually talks, I think he has a video on immediate rebalances from 2023. I'm not too sure. Where's first presentation? This, right? So it's still kind of stalling out. We do have the SMT up here that I'm aware of. And if it decides to run down into this, all good. This is not first presentation. First presentation has to happen after 9:30. So if you look at RTH really quickly, there's no gap here, right? It's just an open. So this would be first presentation gap. I'll mark it out. So you have to look after 9:30. So the earliest it can be is 9:31. So technically the 9:30, 9:31, 9:32. That would be first presentation if it formed at a minimum. So this, if you look at after 9:30, where's the first gap? Boom, right here. First presentation. And I can remove some of these PD arrays as well. But yeah, if you want to switch to RTH, it's a little bit easier to see, so you don't have to look at these. The daily profile is similar to yesterday's profile. Are we expecting the same reversal? Down to shorts, I was originally looking for that. I was looking for a discount. But since we have the SMT, then I wouldn't be looking for it anymore. So if you look at the daily bias, what did I say? Given the daily profile, I would expect a drop back into discount of the dealing range. We have SMT at the PM session highs. How we react to the 1 hour discounted balance will tell us the profile for the rest of the AM session. So I was looking for a drop into discount originally. And then how we reacted as a result was going to tell me basically what I need to know for the rest. So we dropped into discount on ES, failed to on NASDAQ, SMT, and obviously slow grind up. But that's why the bias for me was long, potentially into previous day high. Yeah, the SMT at the highs are scary. And the fact that ES is dropping. So it may get stopped out here. All good. There you go. So I'll post this into, what's it called? Futures trades. And that's the business, right? So long on the thesis of the 3-minute gap. And I may have been stopped out here prematurely, and then it's going to run as part of it. It is what it is. Exactly. But I think that was a valid stop placement after we displaced up here, right? Could have kept it all the way down here. In the beginning, all you need to do is just not touch the stop loss. But I think that's valid placement for me. We can watch into 10:30. But look at the time now. We're at 10:20. And we have not really gotten any clear displacement out of this range. And we're still consolidating. So at this point in time, closing at the charts is going to be the best thing to do. At least for me. And I would suggest, if you had taken a loss or if you've taken a win, whatever it may be, 1 trade per session, 1 trade per day typically is the best. And I hope you could say, you appreciate, I'm not trying to jump, I'm not trying to jump into a trade like immediately after. Oh, okay, now my stop loss got tripped. I'm going to short right now into the sell side, It's not a big deal, right? And this is what I said. It's a learning opportunity. So I'll go back in. I'll figure out, okay, what was clear. And obviously, it was a clear consolidation. It was kind of a forced trade just for the stream. But nonetheless, what could have I done better? Where could my stop could have been? Or where could I have entered that was a little more clear? But whenever we're consolidating like this and it's a tight range, the best thing you can do as soon as you take a loss, just close out the charts. Right? There's nothing in there, especially if it's consolidating. Think about what consolidation is. It's just building liquidity. It's there to literally just hunt your stops. It's there to just consolidate. And the program is to build stops and just continuously take them, right? You don't want to be in that kind of market. You want to be in an expansion market or reversal or retracement. So this is the one profile you don't want to be in. So I know it's hard to think logically sometimes, obviously, when you get stopped out, when there's nothing wrong with that. But if you have rules in place of, okay, here's my risk, took a loss, boom, I'm done for the day. And I can fix it, when the next setup comes. That's what you need to think. And it's a good comparison from last week, the last execution that we did. We got a nice, win, 3K win or something, 3 to 4K win. And this was like 1 point something stop loss, stop out. I don't even know. So half of it. So that's why stop management and good positioning size is important. Where you move your stop to, want that to be an expected or likely sweep in between legs 1 and 2 that you've mentioned before. You mentioned before, and I've seen done on my own back to seeing this, there's almost always another sweep between legs 1 and 2 on the market maker model. That's true. I would say that it's possible, right? You could have seen another sweep down into this, and then it continues. This is an intermediate term low. Okay, we have a short-term low to the left of it, short-term low to the right of it, right? If we were to turtle soup something, I would want to see this turtle souped and not this one. So that should have stayed intact, right? That's also where the stop was roughly around consequent encroachment of the first presentation gap. Also, mean threshold of this bullish order block. So it could stop this out and continue up, and that's maybe something I didn't see in hindsight. But I would have liked if we stopped around this and then continued up and held that short-term low. But now that we've taken out this intermediate term low, it's possible we just continue moving down, or we just stay in this consolidation until 12 p.m. We do have orange folder, what's it called? Someone's yapping at 12. FOMC member Waller speaks. Okay, it's not Powell, but we don't really have anything else. So that could be why, but take these off. Anyways, so I mean, if you look at this now, hopefully with clear vision, not something you want to be looking at. Not something you want to be trading. We're at 1023 here. We've not displaced in either direction. Clearly, we have SMT at the highs and lows. The last imbalance we formed, the last bisi we formed was first presentation. This is the only bisi between now and then. Right? We have one sibi. We have a sibi here. There's no bisis in here. Really tough price action. That's something you can go back and study. But typically, what I would say is if you're going to use hindsight to be like, okay, what can I have done better? Don't look at this as a reason to trade. Look at this as what were the telltale signs for you as to why you could have avoided this trade in general, right? Because I don't think there's any high quality setup in this. It could run to buy side. It could run to that IRL below. Either way, I don't think it's high quality. Right, and that's the kind of vision you have to be looking at this, the lens that you're looking through. Not how many setups can I take that provide a win, but how many setups would I feel confident in entering in? And if it stopped me out or it hit TP, would I be confident in not taking the trade, right? If we had a super clean market maker buy model in here and it was an obvious discount, like think about a 2022, think about the most clear setup you could see. Those are the setups you want to be taking because you want the setups that, not the ones that are win, like at least this is the kind of mentality you want to have, is you want the setups that if it were to stop you out, you feel good about it, which it sounds so weird, but the ones that you can feel the most confident about, that like if it were to stop you out and you're like, I would have still taken this trade 10 times out of 10, that's the kind of trades you want to be taking all the time, right? Like if it's a clear market maker model and you're like, okay, I know exactly what it's doing. If I get in here and it stops me out, I'd be genuinely surprised. And then boom, it stops you out. In hindsight, like I feel like you've probably mentioned this. You've mentioned this before on stream, but there's some trades where it doesn't work out, and I'm like, I still would have taken this 10 times out of 10. I think this is a high quality setup. That's the kind of setups you want to take, right? It's the ones that you feel comfortable in losing and winning. The last thing you want to do is take a low quality trade or a trade outside of your model, because think about it, the times you take a trade outside of your model, losing on those feel a lot worse than the times you trade inside your model. And now you can refine that even down even further. If you're trading inside your model and it's the highest quality, losing on that is going to feel even less emotional. It's the times that you trade outside your model, you're trading Asian session, you get stopped out. You're like, okay, why the heck should I have done that? Okay, now I'm going to go in with three contracts and try and fix it. And then what happens? Boom, you just keep taking losses and then your account's gone. So there is a, in the beginning, you're going to think, okay, I have to stop over trading and stop over leveraging. But that's such a surface level. You have to dig deeper as to, okay, why am I trading this? Why was I trading outside my model? Well, you were trading the P&L. I wanted to get X amount before the New York session. Or I wanted to, I wanted to post this win into Discord, or I wanted to post this win on Twitter. And I posted a video in the psychology chat. If you have time to go back and watch it, I would highly suggest it. It's like 5 minutes long. But if you go back to psychology and there's like a 5-minute video regarding Twitter, it's just like a rant, I guess. But you have that this is what the journal is for, is figuring out, okay, what can I have done better? Would I have taken this trade 10 times out of 10? And to be completely honest, I would have not taken this trade 10 times out of 10, right? It's not really super high quality. For the stream purposes of just managing loss and stop position, it's important. But if I had taken this on live, wouldn't have done it. I don't think, or I would have, have to go back in and study. Okay, why did I feel like this was a high quality trade? Let's say you were expecting better PA and then end up in this chop. How would you manage the trade? Would you just get out, or would you try to hold? If it was better PA and it ended up like this, normally then I would keep my stop where it was. So if the entry is good, the stop should never be touched. I wouldn't manage the trade any different. In chop, you have to be more conservative with stop management, right? Because there's going to be high resistance and it's going to come back in like this and take stops. It's going to retrace deeply. The stop must be conservative. In high probability, expansion legs, you can be more aggressive with stop trimming. So until you can see, like, I look for secondary displacement. So if this was the entry, or sorry, if this was the entry and we had to stop down here, if we had that bisi form and we had this immediate rebalance and then we gapped up, stop trimming to here, I think would have been more reasonable. But since we kind of, we didn't have any bises in here, there was no secondary displacement after the entry. That's typically what you want to look for. So if you're entering on a gap and we drop into the gap and then we displace again and we form, breakaways, that's where you could feel comfortable as long as we're taking out some sort of a short-term high and we have a retracement. That's where you can trim stop to there and then to there and then to there, right? Think of it as like a fractal market maker buy model. It should, right? If we go back to, let's go back to yesterday's price action. I'll show you exactly what I'm talking about. So if I had the luxury of my alarm working and my Wi-Fi working yesterday, I'm just kidding. But look at this. Dealing range, high quality macro short and premium, looking for sell side, the London session low down here. For value gap, oops, wrong one. For value gap and premium, trades into it. Secondary displacement. This is like boom, we're that to me is exactly what I want to see, because now there's a new gap that's forming. And now think about it. If someone was to enter on this gap, where would they place their stop? Here or up to here, right? Because now we have an order block, we have the inefficiency. We should be holding that. So this is like, if your stop was going here, we got this entry and then we gap down. If we're taking out a short-term low, so as soon as we take out that short-term low, and this is a completed market maker sell model now, I'm trimming stop to there. Does that make sense? And then same thing in here. We have another kind of fractal market maker sell model, and we're displacing again, taking out this short-term low. I move it to the next intermediate term high or low that's formed. So that would be one as soon as we form this short-term high. So as soon as 1005 prints, this is now an intermediate term high, right? Because now we have a short-term high here, and this is a gap fill. So gap fill, intermediate term high, short-term high there. Then you're trimming stop to there, right? And then obviously you're taking partials along the way. So it's not like you're just trimming it, stop and jamming it, but you're taking partials along there. That was still a good 90 something points away from entry. So yeah, 90 points. Reasonable. Then London low would be the next one. And then obviously you would have been stopped out here in profit. It wouldn't be in break. It wouldn't be at break even. It wouldn't be up at a loss. And typically the best, beginner tip I would say is as soon as you take a partial that's reasonably distance away from the entry, like not you take an entry and then 2 points away you take a partial. I'm saying entry, 40 points, 50 points, you take a partial, then move stop to break even, right? You don't want to take a loss after you take a win. Logically, that at least for me, that just makes sense. So, at this point, then you're still what, like 50, 36 points in profit, and you're taking basically a stop out there. So that's what you want to see, this kind of second displacement. You can go back and look at high quality macro trades and how many times we've kind of formed that displacement, like after an entry. Same thing in here, order block, fair value gap, displacement, boom, right? Then trimming stop to here automatically, and then stop trim to here. So that's like whenever you have a high quality trade entry, you want to see that displacement away. That's form in the direction of your bias. And finally, now actually we have a first gap here. Wrong time of day to form the high, by the way. So this is going to be ran out, and eventually this buy side too. So stop could have been in the wrong spot. It is what it is. I still think the buy side is going to be ran, and we're going to reach up into -2. So I'll post it into those predictions. I think an important part of not over trading like this is accepting responsibility. So in this case, stop out. That's my fault. I could have left stop X, over here or over here. I could have done this. I should have done this. But what do you deal with? The what is. You must always deal with the what is in trading and in life. You don't deal with the what if or the could or should or would. It's the what is. What do you do? So if the what is in this case is you got to stop out, and the what is your risk management and your rules state you can't take another trade, that's what you do. You don't come into this and be like, okay, well, if I should have had my stop down here, and if it didn't stop me out, I would still be in long. So I should long right here with this fair value gap and with this order block and still target up here. What are you saying in that statement? If, could, I should have done this. So as a result of me should have doing this, I will do this. That's not how that works. All right, and the last thing you want to do is you take a long on here and it wins. Why is it the last thing you want to do? Because now it's reinforcing negative behavior. And trading is the one thing that you can do something stupid and get paid for it. Right? There's no other profession that you break your rules and you don't get fired. Like this is the one thing where, okay, if you break your rules occasionally, it'll sting really bad on the times that it hurts, and then other times it'll pay you for it. That's why you don't focus on the P&L, because the P&L does not show if you're a good trader or not. Execution does. Right? You could make theoretically thousands of dollars and be breaking your rules, but that doesn't show you're a good trader. Does that make sense? So you have to be obsessed with the fact of becoming a trader, not becoming a profitable trader. You already have what it takes, but becoming a trader. What does a trader do? How do they manage stops? How do they react to losses? So, going long off this because I should have had placed my stop down here, that's not how it works. That's the way you have to think. So what actually happened? I took a stop loss. What does my rules say? I can only trade one time per session. End of story. There is no buts, there's not like, oh, if I have done this, or I should have done this. Simple. And a lot of times we make it harder on ourselves, right? Like we fight against our risk management. We fight against, okay, my risk management says I have to use 400 risk, and if I take a loss, I drop down to 200. And if I take a loss there, I drop down to 100. And then what do? We try and fight it. Like we're in a complete logical state of mind when we make that rule and that risk management system, right? Maybe it's like at 9 p.m. and there's not even a chart in front of us, and we're like, okay, this is what makes sense. If I had to take 20 losses in a row for me to get stopped out. But then when we're in the charts, we try and fight against, oh, if I just bump my risk up to 800, then if I take a win, it'll be $1,600 instead of just $800. But what are you doing there? You're trading the P&L, right? And you're fighting against your logical thinking with irrational decision making and irrational like reasoning, because you're concerned about the what if. If this trade hits, then it's going to be $1,600 instead of $800. But then what are you doing there? You're not focused on the execution. So it's just kind of this loop of like, we make it harder on ourselves by being irrational and trading over and over again. And here's an example of, obviously it's a good example where if you had longed here, stop loss there, stopped out, then what would that do? Even higher influx of emotions, because now you've taken two trades and maybe you did something stupid you weren't supposed to do in the beginning, and now you want to fix it because you feel like the house is burning down. So it's all these kind of like, you have to think of it as it's a cycle, and your emotions are a response and a signal to an underlying problem. Not the emotions itself are not a problem, it's a signal to something. Of course, in Boyle. One question, please. I still don't get why you took the dealing range from standard deviations from that specific manipulation leg. So this is the last manipulation leg here, right? This is technically, we zoom all the way in to a lower time frame. This would be a breaker, a really poor breaker, but low, high, lower, low. So this is the last manipulation leg. So I'm going to take the last manipulation leg here and project it upwards. You could be taking something like this entire leg and projecting it upwards. I don't think that's necessary because I don't need to reach for all the way up here. But that would be the last manipulation leg. If we're looking for shorts, it would be this manipulation leg, targeting down there. So it's typically wherever the breaker is. So this is the breaker in here, change the state delivery. I'm going to use that leg. Yeah, it's always the breaker. So where's the breaker in price? That's the manipulation leg. Another stop run on here. So turtle soup after turtle soup after turtle soup. You can see why these are programmed to just piss you off. That's the function. The function is just to piss you off, take your stops, make you emotional, blow your account. They have these days programmed in because then the people who have made money throughout the week, they have one consolidation day that it'll kill you. And the superpower of ICT, in my opinion, is knowing when to avoid it, right? Because it's pretty clear when price is displacing, everyone can make money in that. Everyone can execute in that. But knowing when PD rays are not holding and it's, the bias, the draw on liquidity is not clear and you can avoid it, that's the most important part. Clear draw on liquidity, clear execution, clear win and loss. Low probability is there is no clear draw, or we've already expanded, or it's a day like this where it's a Friday, we have a weird weekly profile, no news today, SMT at the highs and lows, right? If you compare the two charts together, look at this. I mean, it's nasty. You can see NASDAQ is just even more disgusting on the 15. I don't even want to look at that. But anyways, I mean, we've not even formed the new high or low in here. It's still just waiting. All time distortion. So anyways, enough of me yapping. But I hope that kind of, the thought process of how to fix losses and how to deal with losing and what to think of is important, right? What's causing high resistance today? I mean, if you go back to the higher time frame, to be completely honest, I don't know. It's not super clear to me why we're in high resistance, so I can't give you a clean answer. But sometimes it's just, yeah, I mean, exactly. The profile looks very, very similar to yesterday, right? Expansion up, New York reversal, which is what I was expecting. But sometimes it just happens like this. And there is always some variance, right? There's not going to be the cleanest days that you can be looking for. Sometimes there is variance. I mean, think about it. Technically, we already went from ERL to IRL within this dealing range, and then now we're just kind of stalling out, right? This is technically a dealing range here in discount. And as soon as 9:30 hit, we've already completed all the objectives, so now we're going to just chop. Maybe that's one way to look at it. So I will post this stream recording up on YouTube when it's done rendering. Tomorrow we should have a back to sing /Q&A stream. We'll try and plan for that to be in the morning at some point, either at 10 or 10:30 a.m. EST. I'll send a ping out maybe 10 to 20 minutes beforehand, just so you guys know. But sometimes before noon, we'll try and figure it out. So I hope you've learned something today, not about price action, but about yourself, or about how to manage losing, or how to manage journaling, things like that. Um, Overall, kind of a slow week with the bank holiday and with the one news profile. There's not much you could really scalp out of this week, but next week hopefully should be a little bit better. And there's always another opportunity to get our slice of the pie. So I appreciate you guys joining this morning. Take care, journal, do the things that are necessary to succeed, and I will talk to you guys soon. Peace.